Hello everybody, this is Macro, and this is the second video for today, guys, on which I'm going to talk about the data. On the first one I did more about the TA. It was a lot of TA. I did some fundamental stuff as well, but in this one I'm just going to go deep into the sentiment, funding, long short ratios, how the price is, whether we are oversold or overbought given certain indications based on like on-chain analysis and so on, where we are in the cycle. So let's get straight into it. But before that, please remember to like, subscribe, and even share the video, guys. Just share it with people that might enjoy it. Please click the bell icon right above, right next to the subscribe button, so that you can get more updates from us to just watch the videos when they come out, because we have a lot of educational content, especially now that the market has turned down. It's an opportunity to share stuff more educational, because there aren't that many opportunities at the moment, at least in my opinion, because we might be in a more of a sideways market for now. It's a market that, in my opinion, is a little more risky. The risk to reward is not really there, because to me it's a little bit more like 50-50 whether we go up or down. Now maybe it's a little bit more like 60-40, with 60% probability of going lower and 40% of going higher. But to me, the best thing for now would be to wait and see what the market does. So I will keep you guys updated, so you can follow me on Twitter, Telegram, and TradingView as well, so that you can get more updates, more quick ideas of where we are right now. More of my thoughts, more like my diary, my notebook, let's say it that way. So now, when I'm looking at the crypto fear and greed index, the fact that we hit those levels, Maybe some people say we are in a similar situation to March 2020. However, that is coming after a year plus of bull market, so it's not really exactly the same. Now, of course, that provided a very good opportunity for buying the dip. There have been some very sharp bounces, but you have to be very careful on how to buy the dip and how to time the dip, because if you bought after the bounce, then potentially you got crushed again. Although yes, maybe we have bottomed. The thing is that if we are in a bear market, the thing is that even in a bear market, we have seen those metrics before, because the crypto fear and greed index started in 2018, right after the drop, or a little bit before the really big crash down to the 300-day moving average back then, where we dropped from 20k all the way down to 6k. And we have hit those metrics before, we have hit that number before. So getting down to 10 or below 10 is something that it's not new to us. We have even seen it in August of 2019, and that was more of a signal that there was more pain to come, rather than that being the bottom, because we only saw that once as being the bottom in 2020. And that was because we were already in a long bear market. We were going sideways at that point. Alts had been crushed before. Alts had just started going higher, and then that came, the COVID came and crushed everything. And for this reason, I just feel like after being in such a frothy period, maybe it takes a little longer for us to recover from here. I would expect a little bit more of a period with the fear and greed index below 50. Maybe that provides a great period for buying the dip. However, I just be a little bit more careful based on all the stuff that I mentioned before, because the charts, they don't look that pretty, guys. When we have such big drops, at least there is a period of consolidation, maybe a period where Bitcoin rallies, but Bitcoin does look very weak at the moment. If it starts closing above 42k, maybe things will change. Who knows? Maybe, like I said before, it's time for Ethereum to gain more and more market cap, more and more share, at least versus Bitcoin. And then during this bear market, we might slowly see Ethereum kind of become the gold standard of crypto in a way, in the short term, because Ethereum has a lot more things going for it. Maybe a lot of the outflows, maybe part of the drop is the fact that people have been moving out of Bitcoin and into Ethereum. And that kind of happens in a way that's a little bit more chaotic rather than, linear. Like many people might be expecting things to just go up, both of them go up, and then Ethereum outperform. But for that to happen, it's a tough situation, because it requires too much money coming into the market, or Bitcoin staying completely flat, which is almost impossible. So those flows, like money coming out of Bitcoin and into Ethereum, create a little bit of a spiral. So If that happens, if that flipping happens at much lower market cap, it will be much easier for that thing to happen rather than that happening when Bitcoin is a multi-trillion dollar market cap and Ethereum having to be even bigger than that. So for now, the Fear and Greed Index again shows more of the downside. Here we have been sort of in a little bear market slowly. The sentiment had been changing, the market had been changing slowly and steadily. Things hadn't been going very well. And the next one that I would talk about is the bull market percentage, which essentially had the same rally that I had in 2020, where it went from the bottom that I had after the COVID crash. It had that nice bounce, then it had that second top that was lower, then it had that third one. So alt season was ongoing from about the 15th of May, or maybe a little bit earlier for some coins, and then it lasted up until the 1st or 2nd of September, where the big crash essentially happened back then. And after that, the bear market of alts versus Bitcoin had started, where only Bitcoin did very, very well. So maybe from here, at least based on the previous alt season, we might have 4 or 3 months of bear market for alts, which isn't like that uncommon. Okay, so this alt season actually lasted for about 4.5 months, or maybe a little less, like 4 months and 10 days, something like it, because it lasted from January 3rd up until potentially May 10th or something like that. So it was a little bit more than 4 months, whereas the previous one, at least the one in the summer, lasted for 4.5 months. Excuse me, it lasted for 3.5 months precisely. But the key difference between the two is that back then Bitcoin was really going sideways, and it had only pumped about 20%. And once Bitcoin broke the 10k level and it went up to 12k, then alts did pretty well. And alts continued to do well, although Bitcoin started slowing down and the pump was very short-lived. It kind of accelerated the bull market for alts. Okay, so we had that crash. That was when Bitcoin went from 10k all the way up to 12k. So alts got crushed for a little bit. Then once Bitcoin stabilized and went a little bit more sideways at the 12k level, alts started flying again. And then alts had 3 weeks of incredible upside, and then it started slowing down slowly. There were many alts that kept pumping, but we started seeing a rotation. Some alts had topped, and then some other alts kept going higher. So we are kind of in a similar scenario right here as well, because we had that very fast initial alt season where everything did well. We had many incredible pumps, but then slowly alts, although many did very well, there were some cases where alts started slowing down. Many of them didn't do that well, and you know, it's just that thing where money slowly flows from certain alts into some others. Maybe that time we also probably saw that with Ethereum as well, because Ethereum was probably one of the last ones to pump. So slowly some money started flowing back into Ethereum from those coins, because at least in this time and back then as well, Ethereum was lagging significantly. So once Ethereum started doing better and better, and this time around something similar happened, because money started flowing out of the smaller coins, small and mid caps, back into Ethereum, then the whole thing kind of flopped and started turning around. So for now, who knows, maybe the bull market continues, but in my opinion, I will be a little bit more careful, because if we just have a look, guys, at how things have been going in general since Binance kind of launched, maybe I should just put this one, the 30-day, 30th, right here of June, to just have a little bit more data. Now, if you have a look, we just have consistently have 3 legs before the big crash and the consolidation. So for example, if you look at the period from May of 2018 all the way down to potentially September of 2018, there was a little bear market for alts, especially versus Bitcoin. Then we have a certain period where alts do very well. Some of those periods get really crushed, some others just stay elevated. Now in the bear market, those periods were constantly getting crushed. We didn't have like incredible returns, but there were periods where you could find at least some alts that would do well. There was more like of a sideways period versus Bitcoin rather than a proper alt season, but again, it was just a period where alts at least were not getting crushed. One of those was at the end of the bear market. The other one was right after Bitcoin had crushed alts after going to 14K, and then once Bitcoin fell down to 8K, alts started doing very, very well. Essentially, that was when alts had the ban, essentially when Binance went into the US and it stopped functioning for the US citizens, so many US people had to sell their alts. That kind of forced the capitulation a little bit. What also happened was we had backed, so a lot of people went into Bitcoin back then because there was hype about backed and some other stuff. And overall, the other thing that I would say in this area is that we had that COVID pump. Maybe that would have continued higher initially, but again, it got crushed. Then we got a period of sideways or down move. We can also have a look at stuff like Bittrex and some other of those. Now, these don't show the best things because Binance has most of the attention, but I would go back into, let's say, a period where only Bittrex and Poloniex were around at the time, so, or at least they were the main exchanges back then. So if I just have a look at that, maybe I just put this as the 8th of 2017. So this is a 3-year period, and you can see that a very similar pattern kind of forms, where you have the initial like pump. It lasts for about 3 months. For example, this one lasted from the end of 2015 all the way up to the beginning of April of 2016, so about 3 months. Then we had the bull market for alts from the from March all the way up until June of 2019, which was essentially 4.5 months as well. Now, there was a little bit of a pre-alt season for that one. That alts did relatively well. There were some alts that did very, very well in Q1 of 2017. But overall, the big part of the alt season, the bulk of the alt season started later on. So maybe you could consider that one for 4.5 months too. And maybe that was the end. Maybe the mini alt season that happened at the beginning was kind of different. But the key difference with that one is that Bitcoin did a lot better very early on. There were different situations back then because we had very harsh news. We had some stuff about Bitcoin, had the rejection of the ETF. We had the China ban, the leverage ban to some exchanges from China. Or at least it was the part one from the ban. Then we had Bitcoin having scaling issues and the threats of the fork from Bitcoin Unlimited and so on. So Bitcoin hadn't really gone up as much and as fast as this time around. So the situation is clearly very different. The leverage also playing a huge role this time around, because back then people, in order to speculate, they would have to go and buy altcoins themselves, just buy them spot. There were a few exchanges that would allow for leverage like Bitfinex and Poloniex, but it wasn't really that common or that used for altcoins. Okay, and right now you can buy tons of alts in many different ways, so it definitely isn't the same. Now, let's go a little bit into some of the models. In my opinion, it's probably going to be best to go some stuff from Willy Woo, because he did post something about the NVT score, like I mentioned before. Now, when we see the NVT or the price drop below the NVT so much, usually has been a bottoming signal. He compares it to 3 different periods, so it might be in a similar situation like a bull market, and we have seen something similar before. This was probably one of the lowest scores ever, and whenever we have seen it even before the 2013 bull market and so on, it has been a great signal. These were like bottoms from crashes, but there have been other periods where we saw a similar price and then the price went higher from there. Okay, but this time around, who knows? We do see that the NVT has been falling for quite some time. Maybe that was an extra signal. Maybe that has been the capitulation point. so it may be a nice place to be buying. However, it might just also mean that we're just going to have a dead cat bounce and the NBT might start rolling down as well. So for now it keeps on going higher, or at least it has been going higher, but now that the price is dipped, maybe a NBT turns, the price catches up a little bit with the NBT but then falls again. Potentially that could mean the price going up to 53k. Now, if we just look at other models, the price could fall a lot more. On the one side, I do feel like we didn't really go sufficiently high, but maybe we do pull back down to 20k, who knows. This is something that I want to talk about a little bit as well, because we did leave all those gaps on the Bitcoin price chart. Again, the MicroStrategy buying and all that news that came all together, that big breakout did play a role. We had that major gap. And if we have a look at the Ethereum chart in the futures, I've mentioned that several times before, we do have those gaps in these areas. Okay, so we have a gap in the 18k zone, then we have the untested all-time high about 20k, and we also have that really major gap at 23k. Now we also have that double bottom that I don't like. Again, I mentioned that on the previous video. On some of the exchanges it was swept, but on some others it looks like a triple bottom right here, which is definitely not something that I like. Now maybe the price comes all the way back up here to fill that gap. That gap at the top at 60k was filled. The one at 63k wasn't filled. It was just a retest of the support and we fell lower. So there is a chance that we get up to 49k. We have the untested area at 53k. So overall it's just like, in price, in terms of like nominal terms, going down to potentially this gap is like about $14k, and then going all the way up to, let's say, 53k, it's also about $14k. So it's about 14 to go down, 14 to go up. Pretty much similar drop down or pump higher. So it's very tough for me to say, guys, what's going to happen now. So it's a 50-50 situation in terms of risk to reward. Maybe the bull market goes even lower. Maybe, the bear market goes even lower. Maybe we get a bull market and we keep on breaking higher. But currently, the structure right now is not great. It doesn't really favor bulls. We are still at a little bit of a resistance zone. We haven't broken above the 42k level. So until we see some extra strength, who knows. Now, like I mentioned in the previous videos, we did touch the 200-day moving average for Bitcoin, which was great for the CME. Maybe that was a good sign that, because we've never really touched it on a proper bull market before, maybe that was the good sign that we're going to have a continuation to the upside. But because, like I said, we've touched the 300-day moving average so many times, it doesn't look great. Now, could we come all the way down to 14k, 12k? Maybe it's possible. It is possible, because again, it looks like we had a big bubble and then that is crashing down. The way this might be crashing might be way faster than we went up, because bear markets sometimes tend to be faster than bull markets. Or maybe we just get a 70% crash and then we go up again. Because if you have a look at this, guys, the same way we kind of retested this area, like I mentioned in the previous video, that we had that key breakout level from 4,200, and then had that major pump that was never retested. We had a retest with the crash. So maybe we do get something similar, okay? Because from the all-time high that we had around 64k, maybe we do have a 70% drop all the way down to 20k, and then we'll continue higher. Maybe it's just a really weird crash, like the 2013 crash, and then we'll go a little bit of sideways, and then we'll continue higher. I have a hard time believing we will go below the all-time highs for now. Although it is possible, okay? I have a hard time believing we will go into an 80% correction. It seems a little bit irrational based on the various models that we have. However, those models might be broken by a little bit, just maybe invalid for some time, and then we might get back above them very quickly. So it just might be a big corrective move, and then we just restore the previous bull market, and it might just be a little bit slower overall we might just see a grind up rather than what we saw right here. So rather than having an explosive move, maybe this time around we'll just have a grind up rather than a big boom. Now the other one that I want to show you guys in terms of models that are showing that we're very cheap right now is the stock to flow multiple, because we did hit some really low levels on the stock to flow multiple. If we keep dropping, we will potentially go much lower than the 2019 capitulation bottom. Maybe that will render the model invalid. It is possible that it is invalid. But the main thing that I want to say about this one is that if the model keeps functioning, and that means that the model's price keeps going higher, if the price keeps going lower, the higher the chances will be for us to bounce. But then the model might be a little bit invalid because Ethereum might be taking the place of Bitcoin, which changes the situation quite a bit. Now the next one has to do with the stablecoin ratio. Currently we are actually more, let's say, oversold. We are cheaper than we were in October of 2020. And what that means is that currently there is more money than the supply of, than the market cap of crypto in the market compared to back then, which means more and more money keeps pouring in, maybe for yield farming, maybe for trading other stuff, maybe as a store of value, maybe, you know, for transactions and so on. But the truth is that the more stablecoins flow into the market, more people are parking their wealth in crypto and are using stuff in crypto, the more money there is sitting on the sidelines to be buying the dip. So from here, I don't know how much lower could this go. It's kind of like a bullish signal. Maybe we drop a little bit extra and then we find the bottom, because I have a hard time believing money will be flowing out of crypto now. The only problem is that maybe the wealth is concentrated on very certain hands, which aren't really willing to buy straight away. Maybe it's just people who get the wealth, maybe exchanges and so on, which aren't ready to deploy that cash back into the market. It's not unlikely. I wouldn't be surprised if that's the case. Maybe it's some big firms that are only use them for trading. And that's the other big thing, guys. Remember that now there are all these big trading firms that are mostly trading, and they are sucking the blood out of the market. So it's not as much retail driven like 2017 was. So both the futures and the perpetual swaps taking over and having such a big part are killing the spot markets a little bit, because they make everything a little bit more of a gamble rather than long-term stuff. Plus retail traders usually lose when they trade. So if big players take advantage of all these fluctuations, they slowly take away money from retail traders, which would have used that money to invest in crypto long term. So it's kind of bad for the long-term prospects of the market when things like that happen. Now, let's have a look at the long-short ratio stuff, guys, because the long-short ratio of Bitcoin, like I said before in the previous videos, it dropped from about 2 all the way down to 1.1 to now currently 1.2. On the 1 hour, it shows a lot less. Maybe we will finally go below 1, which might be a great opportunity to buy. However, we might see it fall below 1 and then we might see the bottom. So again, there is the potential for another little crash before we see a proper reset on the market, because we still, and that's my issue, we haven't really seen a long shaken out so badly that they have to really capitulate in a way that long short ratios will go below 1. For now, the funding has turned a little positive, which is not a great sign. I would have liked to see this as a sustained red, rather than having bits of green in here. So the aggregate predicted funding is the most negative it has been. Now that's a relatively bullish sign. However, also you have to be aware that even in big bear markets, sometimes you have negative funding. We do get some periods where funding stays negative for a really long time as the price drops. And that's something that we have to kind of be aware of, because it's not the same as having funding go negative at the early stages of a bull market and funding staying negative for a while if we are in a proper bear market. It's just something that we need to be aware of. Now, Ethereum seems to be in a little bit of a better state in some sense, at least when it comes to the price action, but the funding kind of remains the same. I don't really think Ethereum will be able to avoid the fate of Bitcoin. So if Bitcoin goes down in the short term, Ethereum will go down as well. And maybe slowly it will hold better, and then we might see some extremely nice pumps for Ethereum, which for now, however, would probably look like ready for a little pullback before going higher. So for now, because the bounce has been so hard, I would expect a correction and then potentially more upside. So remember, we also have the Ethereum futures on the chart, because you have the CME futures currently. Now, the main thing that kind of annoys me a little bit is that the big correction happened during the weekend, so the futures didn't really come back to retest the place that Ethereum actually launched. Maybe that's not a great sign. Something similar, like I said before, those gaps go filled for Bitcoin and Ethereum as well. Now, when you see such a pattern like this one, it's definitely not a good sign. When you see the gaps go with the head, like a kind of head and shoulders pattern, and then go down, leaving such a gap, retesting that old resistance, turning into support, and then turning back into resistance with a similar gap of similar magnitude, not a great sign, definitely not one. Now, maybe Ethereum is able to come all the way back up to 32k, but for now, at least, because you can see here that back then Ethereum didn't really have proper trading. There was much more illiquid at the beginning of the trading launch. Maybe we do get all the way down to 1,700 again, and then go higher. Maybe we'll go higher, but for now, I think that if we get another dip, guys, it's potentially over. If we go back below 32, I think there's no way, at least 32k for Bitcoin, I don't really think we will bottom above 27. I would think that we're probably gonna fill the gap at 24k, we're gonna bounce and then slowly bleed all the way down to 20k, which might be the actual bottom, at least for quite some time. Now, let's have a little look on some other stuff, some tweets that I have gathered. One is from CryptoQuant. The stablecoin ratio for all exchanges has hit a yearly low. Now, I don't like the fact that they use Bitcoin, only Bitcoin, as the reserves. I would like them to include all the other alts and how much they weight, because Bitcoin is now less than 55% of the market, so it's about 45%, so 55% is altcoins, so we definitely can't ignore them and how much they have grown over time. But again, it just shows that there's a lot of money in the market now. Because of the fear, maybe that money doesn't get deployed, but what this means is that probably if we have a bear market, it's going to be short-lived and potentially the recovery might be pretty fast. Now, the other thing is that yes, there are more and more stable coins into exchanges. A lot of money could start buying a lot of alts. However, please remember that maybe that just sits on the sidelines for quite some time. Maybe some of it goes into some lending as well also. And the other thing is that maybe some of that money might flow out again to go into yield farming. Maybe these people that buy the dip are retail traders and they get crushed. So just be a bit careful when you look at these things. It doesn't mean that we're going to go up, because again, I don't really like only looking at the Bitcoin chart, but also the total market cap. So the next one, guys, I want to talk about is the Bitcoin inflow to exchanges. This one starts from July 2018, so we don't really have that much data in terms of how potentially the market reacted when the bear market started. For now, I have seen that most inflows have come at least during the end of the bear market, when the market had already dropped significantly and they kind of signaled the bottom, or they came very close to a bottom. Since Key posted this, we did see a pretty nice bounce. However, we might see more of a drop because of these inflows might continue a little bit more. We have seen a lot of outflows as well, but keep in mind that at least for now, maybe it's over. At least the inflows might be over, but until we see a close below 40k, I would just tell you guys to be a little bit more careful, because then with all these signals that we've mentioned so far, maybe we do get a little bit of a confirmation that things are back on track. Now the implied volatility also kind of has signaled a bit of a bottom as well, very similar to what happened back then. Like Ethereum was very volatile, Bitcoin as well. We reached some crazy levels of volatility. Usually that signifies a bottom, at least in the short term. I do believe we might see a little bit more of extra relief, but this doesn't guarantee that we will go much higher from here. Maybe we do bounce a little bit more. Maybe the bull market gets into a bit of a choppy situation. Maybe we're in a bit more of a sideways market than either a bear market or a bull market. And then after some point where we see some resolution, we might have more clarity to just say whether we're gonna go up or down. Now, something that I talked about a few days ago was also the GBTC premium, which has started closing. Maybe that's a little bit of a bullish sign. However, whenever I look at the price of GBTC, I'm not really that impressed. It looks a little off. Now, the fact that we swept that low, it went lower than what we had gone on the 27th, might be good. Maybe Barry is putting some money into the market, but the fact that we have fell below that low, but that high, that previous all-time high in 2017, and we also have broken that double bottom here, it doesn't look great, because to me it looks a bit more like distribution so far. Maybe again that comes because people have capitulated. There were signs from GBTC that the market was already turning for quite some time. It wasn't a great sign. That's why we had that very big drop. No idea how low we go on GBTC. Maybe we go down to 17 or even 13, and then maybe that's where we actually bottom. I don't really expect us to go much lower than that, but for now, or even maybe we bottom at 24, but for now it doesn't look great. For those that were looking to buy long term, I had mentioned this before, you could have bought GBTC on FTX. If you're not a US citizen and you didn't have access to GBTC, you could have sold some of your Bitcoin to get into this. So essentially you will be buying cheap Bitcoin. If you believe that an ETF is coming, that would probably be a pretty good investment in the long term, because it would be like buying Bitcoin 20% cheaper. Now this premium has closed, so I don't really recommend going to buy right now. Maybe again it's because Grayscale has put some money in, or maybe just because some pretty big investors believe an ETF is coming and they have started buying themselves. And finally, guys, yeah, it's the same thing. I'm not gonna say much more. It was just the GBTC premium closing slowly. Nothing more to add. I think I've covered all the topics that I had to cover. Please remember to like the video, share the video, comment, just let me know what you like, what you didn't like based on the stuff that I said, some information that you would potentially want to hear from me. You can also follow me on Twitter, TradingView and Telegram for more updates. And of course, you know, if you have anything, you can just message me directly to ask me about any of the stuff that you want to hear from me. Maybe you want to ask a question, maybe you want to have some private lessons, some coaching sessions from me, because this is also what I do, so that I can help you form your own strategy and become more of an independent trader rather than being based on what others do. Because look, although we might be in a bear market, although the situations have been tough, I think this is a very great opportunity to take a little break, maybe research more deeply in projects that you would like to invest in the future. You might also want to just make yourself better as a trader or as an investor, so that you can react better in the next bull market, which in my opinion, if this is a bear market, the next bull market won't really be that far away, because we all know that crypto is moving really fast. I do believe that we are in a proper adoption cycle. Crypto will keep on growing, although the price might not be growing. Trust me, the the fundamentals of crypto will keep on growing and growing. Currently the price kind of outpaces the fundamentals, but at some point everything will go back to normal and actually the crypto market will be undervalued. Even now, like I said, with some of those metrics, it seems like the market is undervalued based on how it should go. But the truth is that the market might get really irrational to the downside for a little bit, maybe because of all the FUD and everything that has happened now. Of course, we have seen Tesla reverse some of those news, but who knows what lies ahead. So that's why you should be able to do your own analysis without relying onto others. So keep following the content that I do, guys. This is content that will stay around. It's no content that is just for the current situation. I'm just explaining different things that you might find useful. Some of them, they might seem hard for now, but in the future, trust me, you will be able to understand much better what I'm talking about. So for now, it might all sound very weird to you, but at some point it will start making sense and you will be able to incorporate these things in your analysis. So once again, guys, thanks a lot for watching, and I'll see you on the next one.